Where did these 13.1 trillion in deposits come from? That's actually easy. Bank loans created almost that entire amount, and we can see that right in the Fed's data because bank loans grow by that commensurate amount. Bank loans during this 24-year period increased by $10 trillion from 4.9 trillion to 14.9 trillion. That alone created $10 trillion in new deposit. Here's how. There's a common misunderstanding that banks take in deposits and then lend those funds out to other borrowers. That isn't how modern banking works. When a bank makes a loan, it doesn't pull money from someone else's account. Can you imagine if the bank took your money and lent it to someone else? You'd be pretty surprised if you went to spend that deposit and it wasn't there. Instead, the bank creates a brand new deposit, essentially out of thin air at the same moment it books the loan by simply making an electronic credit to the borrower's checking account. Those are the two sides to this double entry transaction. On the bank's balance sheet, the loan is recorded as an asset and the borrower's deposit is recorded as a liability. That new deposit is new money injected into the economy. Banks also create deposits when they purchase debt securities, treasuries, agency bonds, or municipal bonds from households or other non-bank investor. That's the exact equivalent of the bank making a loan, and in fact is the bank making a loan. To make that purchase of a debt security, the bank credits the seller's account with a new deposit and records the security as an asset, just as it would a loan. From 2000 to 2024, banks bought an additional $3 trillion of mortgage and corporate bonds, up from $1.4 trillion to $4.4 trillion. In addition, bank purchases of treasuries from individuals creates another $1.5 trillion. More than our equation needs, but there's some technical things that happen that reduce deposits, primarily equity investments by bank parent company, a couple of other small technical things. So to consolidate all of what I just said into two simple statements, bank lending and related activity created $13.1 trillion, and Fed open market operations created $2.9 trillion. Those together are the source of the $16 trillion in deposit growth from 2000 to 2024. This phenomenon is crucial to understand since it is the very loan and deposit growth that powers US GDP growth.